Hi there, welcome to Kneppy Invest and welcome to a standalone answer and question video. This particular comment and question comes from Just James Dean, who asks, well, in fact, he comments initially that there is a company called Bisalloy Steel, the ticker code BIS on the ASX. This company has seen their earnings increase tenfold in the past 10 years and their share price increase sixfold. And the question Just James Dean asks is multi-bagger. That's it, multi-bagger question mark. Well, this could be the quickest and easiest answer or question I've ever had to answer because yes, this is a definition of a multi-bagger. Share price has increased 6 times over the past 10 years, and that would be a 6-bagger. So if the share price of a company increased more than 100%, that's a bagger. But I have a feeling maybe Just James Dean is asking whether this company could be a multi-bagger in the future. That could be another easy question to answer. Just say, well, if the company has shown that it can grow quite a bit in the last 10 years, then more than likely it can continue that growth in the next 10 years. It's not an absolute guarantee because history doesn't repeat, but it often does rhyme. So I'd say the chances are pretty good that Bisalloy Steel could be a multi-bagger in the future. But I won't end the answer there. What I'm going to do is have a quick look at Bisalloy Steel, have a look at the metrics, financial metrics, including some of those metrics I'll use to determine whether a company might be high quality or not. Also have a look at the dividend of this company. And if you love dividends and you're looking for some income, this company could be really intriguing for you. And then we'll also have a look at the chart. Okay, so this is Bisalloy Steel's website. Australia's quenched and tempered steel plate. Now, Bisalloy Steel is a fairly small company, has a market cap of about, we go the overview in fiscal AI, has a market cap of about $155 million. Not much debt, if any debt at all, just a little bit of debt, a little bit of cash as well. But one of the things I do when I'm researching a company, particularly if it's for the first time, and by the way, they do mention in the company overview that this company engages in the manufacture and sale of quenched and tempered high tensile and abrasion resistant steel plates under the Bisalloy brand name. Now, I'm not a steel expert. I wouldn't be the person you go to learn everything about steel. So I'm not sure anything. I don't know anything about quenched and tempered and high tensile and abrasion resistant steel. I'm not sure if this is massively high quality steel or not. That is not something I will be getting into within this particular video. So if you want to know more about the company, you have to go down a different route. What I'm doing in this video is just having a look at the financial metrics just to say if I could call Bisalloy Steel high quality. Even though the market cap of this company is fairly low, 155 million, doesn't mean it can't be high quality. Doesn't mean it can't be high quality. In fact, you could actually argue that the best type of company to search to hold for the long term is these sort of small companies that have the potential to grow to enormous companies within the next 20 or 30 years. Okay, so typically when I'm researching a company, the first thing I look at is revenue growth. And Bisalloy Steel has been growing their revenue. In fact, over the last 10 years, revenue has been growing at 10.2% per year. Now, this is not revenue per share growth. This is just revenue. So there is a chance that the shares on issue for Bisalloy Steel have gone up more than 10% per year. That would mean their revenue per share has been actually going down. So I'll have a quick look at if the shares on issue have been going up or down. Now, intriguing, revenue been going up 10.2%, earnings per share going up 50.2% per year over the past 10 years. So it seems like either this company has been doing a lot of buybacks or the margins in this company have been going up over the past 10 years. And that is usually the next thing I look at. I look at gross margins, operating margins, and I really like it when I see either and or gross and operating margins increasing through time, particularly for these type of smaller companies who have a potential long runway of growth in the future. So after the margins, I look at return on equity and return on invested capital. In fiscal AI, we have a 5-year history, return equity at 21.8%, return on invested capital at 16%. That's exactly where I want to see it. So no qualms with that at Or so you could actually say, oh, by the way, gross margins at 27.3%, operating margins at 14.7%. I wouldn't have expected margins in this company to be all that high, although I'm not an expert on the steel industry. Maybe these are pretty good margins for this type of company. So you could want to delve into that a little bit deeper. Maybe compare it to BlueScope Steel. I don't know. Now it becomes a little bit interesting. I did have a look at dividends, and sometimes I won't, but I did have a look at the dividends. Dividend yield currently at about 10%. I was like, whoa, that's interesting. For a company that's growing like this, a dividend yield of 10.2%. Now, there could have been a one-off in that. Like sometimes a company will issue a special dividend, which could artificially inflate the dividend yield. So you do have to be wary of that. And the dividend payout is at 81.2%. I would prefer that to be a little bit lower than 81%, definitely below 50%. That is my preference. But with a dividend yield of 10%, I'm willing to overlook that because if this company is cheap where it sits right now, and according to Fiscal AI, the P ratio is at 9.8 and the forward-looking P ratio is 8.7. PEG is also 0.8 below 1, suggesting maybe based off the expected growth, this company is looking cheap. So if this company has a nice dividend yield of about 10% and can grow, that means this company might increase the dividend over time. So you get a nicer, even higher dividend yield on initial capital. And also you might get some capital growth because if a company keeps on growing, the share price should keep on growing with it. So there are some few intriguing things about Bisalloy Steel just based off some of these financial metrics. Now, what I also like to do is have a look, because I'm a very visual person, and I like to have a look. We won't have a look at EV to free cash flow, but what we'll do is we'll have a look at revenue growth, and I'll also have a look at operating margins. So this is where it becomes interesting. So this is the last 10, actually we'll have it, so it's the last 10 years, not including the last 12 months. And a couple of things that are quite noticeable here. Revenue has been growing through time. In fact, revenue has more than doubled over the past 10 years from 61 million to 152 million. Now, it doesn't increase every single year. There's been a few years where revenue has dropped. In fact, from 2015 to 2016, also from 2020 to 2021. So, and also from 2023 to 2024. So just because revenue does drop in one year doesn't necessarily mean the growth in revenue has come to an end. But what's probably more intriguing is operating margins have really increased over the past 10 years. So between 2015 and 2019, operating margins were around about 5%, and then they grew around about COVID-19 and just after that period. And right now, operating margins are around 15%. So a nice growth in operating margins. And if our operating margins can continue to grow, even if the company doesn't grow their revenue all that much, they should still be able to grow their earnings. And probably the best thing this company could do is increase the operating margins, increase the revenue, and that would say a really acceleration in the increase in their earnings. So I do like the fact that operating margins have been increasing over the past 10 years. They've found a bit of scale, a bit of operating leverage. The next thing I want to look at is just income. And you'll be able to see how that increase in operating margins has translated to income. And it's translated to income in a really nice way. Okay, so this is income or profit over the past 10 years. And if you go back to 2015 to 2018, the profit for this company was quite low. So just above a couple of $1 million. In fact, 2.5 million in 2015, 3.7 million in 2019. And then those operating margins, increase in operating margins kicked in and translated to the profit. In fact, profit has increased from just under 4 million to around about almost 16 million. So profit has increased fourfold over the past, 6 years or so. And that's because of operating margins. Also because revenue has increased as well. So I do like that. Do like how the increase in operating margins has led to a nice increase in profit. You also notice profit 15.7 million and the company's market cap is 157 million. So yeah, P ratio about 10 based off that. Okay, next thing I want to look at is just the operating and free cash flow. I always have a look at this just to see if their profit translates to free cash flow. In fact, I think that's very important. You ought to see a company that is profitable but is leaking cash endlessly. So I do like to have a look at cash from operations, also free cash flow. Now, Fiscal AI's definition of free cash flow might be a little bit or subtly different than mine, but for this exercise, I don't mind having a look at it. Now, from 2015 through to 2020, I probably would have looked at this company and gone, nah, move on, because this company on occasion had negative free cash flow and operating cash flow. In fact, quite often, in fact, half of the years, this company had negative operating and free cash flow. But everything changed in 2021, and this company has become highly cash flow positive. In fact, in the last year, $22 million in operating cash flow, $20 million in free cash flow. So you could say, based off this company's market cap, this company is now trading on, was it 7 times free cash flow? 7 times free cash flow. That's not a lot to pay for a company, which would mean this company's free cash flow yield is quite high, quite nice. And there is some research that shows that if you invest in companies that have a really nice high free cash flow yield, you will do fairly well. It's actually a legitimate investing strategy, just using free cash flow yield. Okay, so operating cash flow, free cash flow. What about valuation? So just because the P ratio is 10 doesn't necessarily mean this company is cheap, because this company could always be trading on a P ratio of 10. In fact, it could be trading typically on a P ratio of 5, which will actually make this company expensive compared to history. I would doubt that. So let's just have a look at the P ratio. Now, sometimes you'll get a one-off, or maybe a couple of one-offs, and you'll see a spike in P ratio like we do see in Bisalloy still back in 2017. And don't forget, this company was not profitable for a few years. Okay, so I'm just going to cut that out and just pause for a moment. So I've just cut out that period before that spike in income or P ratio. And this is a P ratio of this company going back to 2018. Now, according to Fiscal AI, the P ratio is now 12.9. So there is, on occasion, discrepancies in Fiscal AI. I'm not sure where they get this 12.9 from, but in fact, it does say date 28th of June. So that's in the past. Oh, actually, that's in the future. So that's really interesting in itself. 28th. Actually, that's 28th of June 2024. That's actually is in the past. So this does not include the last year. So that's really interesting that I didn't realize that before. Now, this is looking in the past. So 1 year ago, the P ratio of this company was 12.9. Anyway, we can still compare. The P ratio is now 10 to what we have seen in the past 7 or 8 years for Bisalloy still. And it's really interesting that for about a 3-year period, the P ratio of Bisalloy Steel was below 10. In fact, it's got as low as about 5 in 2022. So just because the P ratio right now is 10 doesn't necessarily mean this company is cheap, but there's definitely arguments, particularly because the company is growing, that you might get a really nice return out of Bisalloy Steel if you held on for the next 5 to 10 years. But I would not say this is a high quality company just yet, if ever at all. And that's just because of what they do. That's just me. I would not define these sort of companies to be high quality. Okay, so that's the P ratio. Now onto the chart. I also, before I start recording, I had a look at some other evaluation metrics, and it can be, for instance, if you have a look at price to book, and this is up to 1 year ago, you might say, "Oh, this is a bit of expensive." So 1 year ago, you might have said, "Bisalloy Steel, based off the price to book, is a little bit expensive." So I do like to have a look at a few different valuation metrics. Okay, now onto the chart for Bisalloy Steel. Now this is, in fact, we'll have a look at the weekly chart first. So this company listed on the ASX back in 2008, late 2008. What timing there? What timing there? And from when they listed in 2008 all the way through to about 2021, 2022, share price of this company did absolutely nothing. In fact, if you bought on the IPO, it took about 15 years before you got back into the red. Got back into the green. You were in the red for about 15 years because the share price did absolutely nothing. It's probably why I didn't really discover this company until recently. But if you just focus on the this particular chart. So we have the weekly candlesticks and also the 200-week moving average. And just look at the weekly candlesticks compared to the 200-week moving average. You notice the share price has remained above that particular moving average since about 2017. In fact, there was a nice little breakout. It's a nice little breakout on the week of the 24th of July, 2017. Share price in that week for Bisalloy Steel rose 32.56%. So it seems like that could have been the breakout for this company, because generally the share price of Bisalloy Steel has remained above the 200-week moving average. And if you bought when it went below a couple of times, only twice, you've probably done well. And the last time it fell below the 200-week moving average for a very brief period was back in March 2021, and before that was, of course, during the COVID-19 financial panic. On occasion, share prices got close to 200-week moving average. The most recent was back in April, so during the Trump tariff debacle, share price did fall to about 280, which was just above the 200-week moving average. And if we have a look at the daily chart and just focused on the 25 and 100-day moving average, there's no trend in the share price just yet. So before that, there was a really nice trend in this company for about a year. We'll say from July 2023 through to July 2024. Yeah, about a year. The share price went from $2 up to $5. That was a really nice trend, but that trend has come to an end. And really, all I can say right now when it comes to the daily chart for Bisalloy Steel, share price really not doing much. Let's say going sideways, and I would be waiting for a bit of a breakout for Bisalloy Steel, particularly because it does look really good value. So don't forget, I'm recording this video on June the 26th, 2025. So share price could be significantly higher or lower than 348. All right, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.